All right, good morning and good afternoon, wherever you are. So this is what has been going on going into the new year. We've been Let me take all of this off. Since this is the first live stream since November. So we've been MIA for about 6 weeks. Not completely MIA though. The Telegram group has been active, but not as active as it was. So welcome to a new year, and I hope you are all strapped up for the new year. So we've been trading inside of this CB. So I indicated this CB in November, October, November, around that period that we're going to trade inside of it here. And as you can see, from October, from the 1st of October, we've been rallying higher on the dollar. So we had this monthly CB, the low, which is this. Let's indicate this as the. And just above it here, you have the monthly CBI. So I currently am not with my headset, so I don't know how crisp this the audio might sound. So just listen to price. Now the reason why when you have an imbalance like this, coupled with a volume imbalance or a liquidity void, you include all of it together to get precision because the algorithm sees all of this as one set of imbalance. Instead of using the eye of this candle, you use the body, the highest body, which is the opening of this black candle. So here you have imbalance. And also you have this long wick. The algorithm sees wicks as imbalances also. So you look for the midpoint of it from the low to the close of this candle. Then the midpoint of it is consecrated encroachment. So it's a premium wick consecrated encroachment because it is above the current market price. So what have we been doing? Let's take a quick look. So we've been trading inside of this range, which is an imbalance. After taking out these liquidity pools in September. So let's take a quick look at the weekly chart. So when we do something like this, all of this type of top-down analysis, a lot of you miss to like you get sucked into the lower time frame because that is where the executions take place and you forget the narrative that is being drawn and how the narrative is being drawn from the higher time frame. These higher time frames, they are where you want to spend a lot of time on. If you are trading for, let's say, an hour, you want to spend at least 20 minutes or around that range understanding the higher time frame narrative. This is when if you are using the monthly and weekly, the higher time frames. If you're using the 1 hour or the 4 hour as your higher time frame, that can be easily looked through quick, but it's not something you'd want to rush. It's something that you want to be patient with. You want to be patient as you understand the higher time frame narrative because everything that goes on in the lower time frame is all subordinate to this higher time frame narrative. So today is just a tapering session. So we'll be taping the indices market, which is the US 500 and the US 100, which is the S&P. That is the CFD for the S&P and the Nasdaq. So we're going to dive in slow because I'm a bit rusty, even though I didn't completely stay away from the charts. I was still dabbling in and looking around the charts, even though I stopped trading at the third week of November. So since the third week of November until today, I have not placed a single trade, which is good. Now, as you can see, we have this CBA, this sell side imbalance, buy side inefficiency. It delivered buy side here. There was buy side delivery here when price rally. When I'm speaking and I'm explaining something to you, I need you to pay attention to the cursor because that is the only way I can point out to what I'm talking about. So I'm currently discussing this CB from the week of 7th November 2022. That is 3 years ago. Our time flies. So we have this CB here, and price traded just within the lower quadrant of it, delivered buy side and dropped lower, meaning this imbalance here is severely lacking in buy side delivery. So it is inefficient. So it's an inefficiency on the sell side, which is lacking buy side delivery, meaning this is a CB, sell side imbalance. The imbalance is on the sell side and is inefficient on the buy side delivery, which is a CB, sell side imbalance, buy side delivery. So I'm going to indicate this here with this triangle. I would remove this quickly. I just want us to use it for a reference. Okay. So we had the monthly CB, which was indicated on the higher time frame, just above this weekly time frame. We had that CB, and now we have on the lower time frame here, we have a CB here, which further solidifies the and outline the CB on the monthly time frame, making it precise. So you seek precision. The algorithm gets precision from the lower time frame, even though the narrative is being formulated from the higher time frames. So now we had this consolidation from 2022 up until 2024, December 2024, in which we broke this range. This is the range I'm talking about. So we've been trading inside of this trading range. Let's make this blue color. So we've been trading inside of this trading range for the past 3 years. Am I correct? From 2022 up until 2024. That is 2 years. I'm sorry. For the past 2 years. So we've been having a this range bound price action inside of it. Okay, that makes sense because we're coming out of a pandemic. But that's by the way. So we've had this buy program being executed here. Now, from the if you joined us last year, from the beginning of the year, from the Q1, we indicated that we indicated these highs, these buy side liquidity highs, that price will come to take these highs. Why is that? Why did we indicate that going into the last quarter of the year, price will come for these highs? Because if you look at U, the U has imbalances like this on the sell side, and after price took out buy side liquidity on the U, price was poised to the algorithm was poised to go for sell side to pair up those buy side liquidity. And when you have the dollar being ready to go for higher prices, that is simply indicating that all assets which has the dollar as its base currencies, it will be going towards the opposite direction, which is lower prices. We're going to look into that in a minute, but we're still doing this top down analysis here. So doing this buy program, when price took out sales and liquidity, yeah, all of this is just hindsight to understand the narrative that has been going on so that we can be in line with what price has been doing. So doing the live streams, if and when I'm taking live trades, I will not be speaking too much because sometimes our voices get too loud and we tend to not hear ourselves when we are speaking. So it's better to, when you're trading, it's better to avoid every form of noise, including noise that you yourself emit. Does that make sense? So we have this buy side liquidity. So you can look at our Q1 streams from the live stream session and you see why this was our drawn liquidity for the dollar going into Q3 and Q4. So a closing Q3 going into Q4. So when price dropped lower, took out buy side liquidity, yeah, price valued higher, creating this breakaway gap. Here you have a breakaway gap. So when a breakaway gap is formed on a body of price action, you do not want that to be filled. And that is the algorithm indicating to you that price is extremely bullish. That is, we are in a buy program that is extremely bullish. The breakaway gap indicates buy programs that are extremely bullish. When you're watching live streams like this, especially the tape read session, I would advise you to get a journal, a separate journal from all the other journals that you currently have. But if you do not have the luxury of getting a separate journal, you can make use of the journal you currently make use of. Then you, on the top right hand side of your journal, you indicate the date and indicate what video or what educator you are learning from at that particular point in time. Because I would be giving out a little bit of PDRAs and PDRAs matrix, the explanation and in-depth views on how this PDRA matrix, how the algorithm sees price within these PDRAs. So when this breakaway gap has been created, price valid higher. If you zoom further, you see price left this imbalance here. Price also left this imbalance here. So if you are buying on the weekly time frame, say this is your executable time frame and you are trying to buy this after this breakaway gap has been created, you would wait for a short-term reversal into a form of imbalance. So price, you had this, so this imbalance, so this candles high and this candles low. The algorithm sees all of this as one consecutive imbalance. Now your limit order should be placed at the low of this candle, your stop loss at the high of this candle. If you are more conservative, you place it be at the midpoint of this breakaway gap because, as indicated earlier, you do not want this breakaway gap to be filled. Hence, it is your invalidation point. So price traded down. This is an institutional order flow entry due and then rallied higher. Now, this is for your journal entry. When the algorithm has indicated a buy program, that means the algorithm has gone into a buy program trying to deliver for buy side delivery. The best fills will be formed above the equilibrium of a PDRA. What do I mean by that? When you have this imbalance here being created and you're expecting a short term retracement inside of the imbalance or whatever PDRA you have there, and you're trying to use that as a trigger for your buy entry, which meaning this here will be a support level. When you have this support level, because we do not trade support and resistance like the general public trade support and resistance, we trade it using PDRAs as actual support and resistance key levels. So when price trades up inside of this PDRA, inside of this imbalance here, the best fills will be formed above the midpoint of it. So let's get the midpoint of it. Okay, there's no way to get the quadrants of it. Let's make use of this. So quadrants. So every PDRA has its anatomy, and understanding how the algorithm sees price in every PDRA within each quadrant, it's very essential to your precision of execution or take profit, whatever it is. Because when price took out this high here, this is short term trade. This is what I'm talking about. After price took out this buy side liquidity high, price coming for this low of this candle is short term trade because we've taken out this high, price opens here and then drops lower. When price drops lower and you're in a buy program, you understand that you're in a buy program, but you are trading, you are selling. This sell, you are to take all of your position or most of your position off at the first quadrant. Immediately price trace into the first quadrant, because for a buy program, the best fields for going into this buy program, the continuation of this buy program, order flow has been indicated as bullish. Meaning when price comes to the first quadrant, there's a very high probability for it to go higher and fail to come for the midpoint of this range, this PDRA, which is a fair value gap. From this low to this, from this candle's high to this candle's low, these are one consecutive. The algorithm sees this as one consecutive imbalance. So let's take this off and continue reading price. Then price rallies higher and pierce our buy side liquidity target, which is also resting inside of a CB on the monthly and on the weekly. So price traded to it and then dropped lower. During this time, the uninformed will see this as a resistant level. This is what we want to see as smart money traders. What we do, what you're going to learn going forward in this during this year is that how smart money traders cannibalize on flawed logic on the uninformed traders, how we make use of their flawed logic for our own benefit. Now, when price, I've touched on this previously in the previous year, but not as deep as I would want. So we'll touch on that as we move further throughout January, because from February of this year till November, I'll be more focused on my private community, because last year and the year before was free education, and I'll still be giving out free education, but the private settings, the private mentorship is just me holding your hands and explaining to you the executable process, because what's there is not just information, is the application of those information. There's free information everywhere, on YouTube, on Twitter, everywhere. There's a lot of free information, but free information is not what is your problem. So we both know your problem. Your problem is that personal, is that organ in the midpoint of your brain, of your head, meaning your brain, your mind. What goes on inside of your mind, that is your problem. And how to use this chart as a tool to bypass those flaws that you currently have. Because this chart, as you see these candlesticks, these are reflections of human emotions. Now back to it. Back to this. When will pierce this buy side liquidity pool and then price drop lower. The uninformed will see this as price making a strong resistance level, meaning they'll place their stop losses above this buy side liquidity, yeah, above this candle's high, which we as smart money traders we understand that this here is a buy side liquidity pool. So when price dropped lower and filled an imbalance, price does one of two things at a given time. Price goes to rebalance an old imbalance, which it does here, or pair up liquidity here from that sell side that was taken. It was paired with this buy side liquidity, and then price dropped lower to rebalance this imbalance that was created here. And then, as you can see, the bodies are failing to trade below the monthly CB low, meaning price is eager to go to the consequent encroachment of that imbalance and ultimately to the high of it. The consequent encroachment of the imbalance I'm talking about is the monthly CB low to the monthly CB high. So when you take your fib and you indicate the midpoint of the low of the CB and the high of the CB, which is the monthly, we are currently talking about the monthly. This year is your consequent encroachment. So if you are buying when price took out this low, or when this swing point has been indicated and it has been established that price is in fact coming for the midpoint, which is the consequent encroachment, which is your first target. Your second target is the buy side liquidity pool above here. Then your ultimate target is the monthly CB high. You would say you buy around here, first take profit around here, second partials around here. Then you leave something to run higher as price fills this monthly CB, and also this year is the weekly CB. So that's by the way. So that's on that. So we're going to be taping the time is currently 9:02. That is 2 minutes after 9. So we are going to be taping the, yeah, we're going to be taping the New York session for the US. Let's take a quick look at the U before we touch on what we're doing. Okay, this is what I was indicating earlier. This is what we covered for the euro. I hardly trade this asset. So all of this was the buy side liquidity we're aiming for price to pair up the buy side liquidity and come for this low one, this low, and ultimately this imbalance here. This is what I was talking about in relation to the dollar. The dollar has a opposite price action like this. So when this rally was going on around the Q3, yes, around Q3 of last year, we understood that this was a fake rally, and this rally was being used to pair up this liquidity. So we already had this consolidation. So price consolidated here and made a fake rally. So here is price accumulating smart money position and generating liquidity, engineering liquidity on both sides of the market, which is at buy side liquidity and at sell side liquidity. Price generated multiple sell side liquidity pools, including this. So when price rallied higher here, it will take out traders that, and when price has neutralized them, price will drop lower. For traders that will place their entry or their stop losses at this place and think this is a strong resistance level, you see the wicks did the damage and neutralized them, preventing traders from profiting on a long position and also at the short position. We as smart money traders, we are to wait for these sets of manipulation and this jaggedness of price. Now, This is not applicable to all smart money traders because each traders, each individual, we all have different personalities. So there are some traders that will trade this when Aspire is trading above this high. Aspire is trading above this high. Or if they miss this first rally higher here, they'll trade the rejection block above here because I'm getting too deep inside of this. I would not want this first stream to be long, but you're here for value. So value is being given to those who are patient. So price rejected here. So if you're trying to sell this as a turtle soup entry deal, your entry will be placed at this rejection block and your stop losses will be placed a above three PDRAs. So you're going to indicate the PDRAs here, indicate this bearish breaker here, this fair value gap, then you mark out three PDRAs that you do not want it to be violated. That's where your stop loss should be placed. Then price drop lower and created this breakaway gap, then drop further lower, created this fair value gap is imbalance. We traded inside of it, we dropped lower. This is the first stage of the distribution. This currently what you see here is a market maker model, which is this accumulation, manipulation to the upside, and then price further distributing to the downside. The distribution phase that we are this is the distribution phase that we're currently outlining and working through. So price fill this imbalance here, which is the first stage of a distribution model. So price distributed to the downside, pairing up this liquidity and this liquidity. We took that out and price created an imbalance here. So you place your entry position inside of this imbalance. Price fills the imbalance. You make allowances for price to trade inside of this imbalance because price can also still trade inside of this imbalance because the algorithm sees these imbalances like this as one set of imbalance. So you place allowance for price to trade to the yes was disconnected. I think it's the PC, the whole setup. I should change all of this trade setup going into this year. Focused on building businesses. Yes. So now we're discussing this BC. This right here is a buy side imbalance, sell side inefficient. To understand when manipulation is likely to take place and how they are going to use this manipulation to show off traders. Okay. So what do we have here on the weekly time frame? So from the week of the 5th of August 2024, which is the previous year, we've been rallying higher on the indices. And this rally was peaked on the first week of December. So the rally peaked around the first week of December. I'm not saying this is the high, but short term, this was the short term high. Then price came for these lows, and let's see if price comes for this rejection block. So we're going to move this here. So this right here is a rejection block. on the weekly time frame. So we're going to see if Price trace to it and how Price uses this PDRA. So let's take a quick look at the daily time frame. So we're going to indicate the new year opening price because we are in a new year. New year open. I would want to name that with an abbreviation of NYO, but that is also synonymous with the New York Open. So let's just keep it at New Year's Open. So we dropped lower here, took out sell liquidity here, and then rallied higher to rebalance this imbalance. When this imbalance was rebalanced, price dropped lower, then leaving this another imbalance here. So on the week of on January 6th, which is on a Monday, price traded inside of this imbalance here, using this as a resistance level. This is why I said earlier how we as smart money traders uses this PDRA as support and resistance, actual support and resistance to understand order flow. The general public would have placed this here as their support or resistance level and also this high. But as you can see, price does not trade to it. Price does not respect float logic. The algorithm does not. So price trades higher. You see the wicks doing damages, yeah, and the body failing to trade above the midpoint of this. This is price indicating bearishness. Then on Tuesday, we dropped lower. Wednesday, same thing. Thursday, Friday, Saturday, then Monday, today's price action. So we're currently trading inside of this BC on the daily. Okay. So this is the New Year's open. Let's make this tick. All of this narrative that is being gotten from the higher time frame. This is what I would use throughout the week, throughout this week, and also for the Q1 to understand the narrative going into trading inside of this Q1. And if you're trading the ES, the E-mini S&P, you have to use the ESH, which is the March contract. Because if you go to batchart.com, I'll cover that later in a separate video, how to do that. So if you go to batchart.com, you see the open interest. The open interest is on this. So to get actual precision, it's better to use those levels if that's what you're trading. But if that's not, you make use of the chart you're already using. Price is price. So this is the 1 hour. So the close of Friday and the open of Sunday, this is a new week opening gap. So there was gap left here. So it is a small gap, meaning price will not be a range bound price action. Price will likely not be a range bound price action going into the week. So we are expecting a pleasant and tradable trade environment. So we've traded inside of this CB, which is the fair value gap. Now, I don't like this smoothness of these lows like this. These lows, the algorithm doesn't like leaving this kind of lows. And when you have a framework, a trade framework in which there's a 50-50% chance, this is what Mondays typically brings. This is why we don't trade most Mondays. There are specific instances during which we are allowed to trade Mondays. Apart from those instances, we are to stay away from these types of price action where you have this relative equal highs like this, buy side resting there, and then you have these clean lows like this be found inside of this type of price action, except you want to be trading short-term swings. Most times, it is better to allow the Monday reveal the intended direction for the week. Remember, we're also still trading inside of a BC, trading inside of this daily BC here. So we want to see how price uses this BC going into this week. Now, if this BC fails to hold, we would want to see price use this as an inversion level to take price to these lows, these clean lows, which is this relative equal lows which you have here. Now, if I'm the market maker, what I would do is to trade above this high, this candles high here, trade inside of this imbalance, trade to or around this 830 opening price, and then drop lower for sell side liquidity. After neutralizing these clean lows, then I can then drive price higher if I would want to. But I'm not seeking higher prices short term because of this indication here and the higher time frame John liquidity, which we have this midpoint here. But let's see how that plays out. Let's take a quick look at the Nasdaq. always more to up all of the PDRAs, but it is going to be revealed to you as you tape read and you get to know all of these PDRAs for what they actually are. The more you do that, the more you get acquainted with them, and you'd want to be acquainted with the PDRAs to understand what they do and how the algorithm uses them to facilitate efficient delivery of price. From the rejection block to the minor sell side liquidity pool, it's 13 handles, and you'd want to have this kind of range. So before you place any trade, you want your to place for a higher probability trade entry. You'd want to for the ES, you'd want to have at least 10 handles range, so you can trade inside of that 10 handle range. You can take partial off at 5 handles, which is about here, which is about here. Take your first partials here, take your second partials as price violates this low here, and then ultimate target here, which is this minus sell side liquidity pool. When trading on Mondays like this, you want to avoid the you want to avoid that greediness in you, that greed that tries to take over you and want to make you trade the old days range, wanting you to hold on to the close. That is a trap. That is your greed playing a trap on you. So you have to indicate that earlier on in your journey, and that greed is in fact detrimental to your growth and your success as whether a trader or a human in general. So you want to be extremely self-aware about about your shortcomings. So I'm looking at something why, though I'm not trading, this is not a live trade settings. We're just reading the tape and getting to be acquainted with price. Now, if everything is in line, I would want to see speed because this right here is a propulsion block. So I'd want to see this propel price lower. But let's say that's propulsion block. So we're going to indicate that as, let's just write it in full. I think I've spent too much time on social media. Now I do not want to type full. So I'd have to dim that. And so now if this right here is a proportion block, I'd want to see price, propel price. I'd want to see the algorithm propel price lower quickly to the downside to neutralize this sell side liquidity here, which is resting below this liquidity pool. Now, if we are to get to these lows, that is what is left to question because we also have this relative equal highs here. But short term, I favor this to be pierced. Now, you do not need your drawn liquidity, whether a short term drawn liquidity or a long term drawn liquidity to be reached for it to be profitable. This midpoint here was our long term drawn liquidity here, and this minus sell side liquidity pool was our short term drawn liquidity. The idea of taking partials would help you to get out of positions and you bank something. All partial trades are 100% profitable. Every trade you take off, it is a profitable trade. So that is why partials is good, especially for newly developing traders. You have to focus on slow and incremental growth instead of fast wins. You see, all of this back and forth price action. This is one of the reasons you do not trade on Mondays because it is extremely tedious to read. So you do not want to be trading around a trade environment in which the odds are negatively against you. So we're going to end this stream by 10 a.m. That is in about 16 minutes.